Yeah! How you doing? It's been a good day. Didn't even need my AK. Yeah, time to take over the world. Larger than life. Larger than life. Larger than life. Larger than life. It's good to do that though. It's good. Gotta get big sometimes, man, right? Superhuman. Motion creates emotion. Get in the game, son. Boom. So it's a Tuesday. Your week should almost be over. You got a big Thursday coming up and a big Friday coming up. So the easy stuff, all the easy trades should be around now. So anyways, let's go. Oh, I forgot about that. Some Yahoo on YouTube is doing copyright claims on me, so I can't use that stupid thing anymore. So whatever. Now I got to waste time doing another B-roll. So anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It was a good day, didn't even need my AK. That's old school Ice Cube, I think. So good to see you. Hey, it's another trading day. It's what, 8 o'clock in the morning, New York time. This is an hour or so before the stock market opens here in the New York time zone, New York City. So it's very important that we get together as a community and align our satellites. Where have we been? What's happened during Asia? What's happened during the European trading session? Figure out where we are. Now, New York typically isn't the start to something. It's usually the end of something. So unless you're just scalping, what we'll do is we'll look at the trades that we set up 12 hours ago, right? So all that kind of stuff, and we'll look at maybe tomorrow. But as we get closer to the end of the week, you know, we got that crazy weekly jobless claims. Then we got the crazy non-farm payrolls. So, you know, it's backloaded, so to speak. And that's why I said earlier, the easier trades are early in the week. So we'll take a look at that. Well, thank you for being part of the Forex.Today YouTube channel, the community of 12,000 currency traders around the world. I hope it's important to you. I hope it's more than just entertainment. I hope you're taking the time to improve as a trader. I thank you for all the questions that you ask. I thank you for treating our time together very seriously. I thank you for treating your fellow currency traders with dignity and respect by checking all the negativity at the door. You bring nothing but positive energy here and into my life, and I thank you for that. So I hope that you're learning technical analysis. I hope you're learning fundamental analysis. I hope we're dealing with trader psychology issues. I hope I'm helping you develop confidence in your trading, not through positive affirmation, but through control and consistency. And when you get to the point where you're ready to trade real money, I hope you choose tradersway.com. They are the sponsor of this community. They bring this to you. They bring me into your life, and you should really pay it back. So if you are developing skills and confidence and you're ready to trade, tradersway.com. Check them out now. Give them an opportunity to earn your loyalty and respect. Visit tradersway.com. Open up a demo account. Download MT4 or MT5. Throw down some trades. Check it out. Execution speed, fast. Spreads, narrow. Swaps, big. And if you'd rather have an ECN account, get an ECN account. It's just that way. Your way, a trader's way. Okay? Boom, ba-doom, boom, boom. High energy today. That's because I am so tired I could lay it down on the floor and go to sleep. No joke. I this could be the end of my day. So anyways, right? Go big or go home. I'm already home, so I might as well go big. So cool. So where are we? Where are we in the cycle? La 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 la. Let's change the color on that. I'd like to bring this down on our way to 75 maybe. I gotta move. I gotta move. Give me the juice. Okay. Here's another one. Okay. It's not going fast. It's not going hard, but it's going. 4 kids in the house. Are they yours, Mr. Highvolt? Cool. Yeah. Well, remember, maybe this is an opportunity for you to read the book or something. I don't make any money on the book. If you ever want to get a copy, now's the time. Yeah, two of them are yours. Nice. Victor's got 5 kids. Yep. I have 2. Don't forget the dog. The dog's kind of a kid, so maybe 2.5. 3 nephews, 2 daughters. Very cool. Yep. 2.75. Daniel's 18. He's got 3 somewhere. Yeah, okay, cool. Take a look at Beast going up. What? So that's interesting, right? Some of those other ones look like they're coming down. This yen kind of looks like it's going a little more up than down. Notice that we've lost the 21, so we're kind of in the 55. You can see that MACD is above the waterline, but heading back to the histogram, but is maybe slightly opening up, but I'd say more sideways than anything. It was out of position on Sunday to buy. It was a good situation to sell if you were a bear, but right now, generally speaking, nada. Three cats and 60 birds. What? You have 60 birds? Jim has 60 birds. All right. Weak, strong, mediocre, weak. Interesting, huh? So this makes sense to me. This makes sense to me. This doesn't, but it's just probably a timing issue. There's a lot of weakness in the world. This is just something I was playing with, and I don't get it. So I'll put this back. I don't get you. I wish I could get you. And so pound is strong. We already saw that. Okay. You're kidding me. Wow. Jim's got a complicated life. Aviary in the living room. Wow. Reminds me of the guy that invented Tabasco. He grew it on an island off the coast of Louisiana, and he started an aviary outside. He's been long and dead for, I don't know, 100 years, but the birds keep coming back. It's really interesting, huh? Cook, disappear. Wow. All right. La, 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 la. So this pound is strong. Dollar is strong. Yen is strong. So I don't know anything about the pound, but typically yen strong and dollar strong points to risk off. Okay. Swissy typically is strong in this scenario, and it's not. So that's bizarro. But we got 2 out of the 3. So I don't want to look at Swissies because you're not going to see much. So let's go through the dollar pairs. So we know dollar is likely to be strong. We know pound is likely to be strong. So we're not really interested in trading that. We can still look at it just to see where you are in a cycle. Doesn't look like a good setup if you're a bull. And let's do bearish here. And it doesn't, so those are days. And this doesn't look good if you're a bear. So it's really topsy-turvy world here. So as you know, when 2 pairs are relatively the same, in this case both strong, not a good trade even if you find one. The problem is if you're looking for one and it doesn't exist. Okay. All right. So let's go back here. I want to zoom out a little bit. Okay. Wowzer. Holy smokes, eh? Not supposed to happen. What's the name of this pattern? I don't think it has a name. Okay. But nonetheless, I think if you're looking for up, this would be a reasonable place to think about it. Okay. Yeah, roller coaster. Roller coaster. So you really got to pick your lines. This one I think is danger zone for a lot of people. Okay. Now the interesting thing is that we had this coming down in the live trading group. And we had actually something that looked like that. Okay. Tuesday, Monday, Sunday, right? But anyways. So regardless of whether you're a bull or a bear, you got to recognize that we're on an interesting number here, this 9.5, 109.5. Oh, is that right? Yeah. So you said you had about 100 pips on it, right, Luca? At the time, I think you said you had about 100 and we had to discuss that. Yeah. And so I talked you through it. You made a decision. How many do you have now? How many pips you got on it now? Oh, you took now. Oh, so you hit the target. Oh, Victor's got a $1.75 on that. So what did you get though? We talked through the risk management together live. So what did you pull out of it? Oh, you got out right down here. I can see, right? Right. All right. So we can just. So let me know if this is accurate. So you were short. Oops. We got you short here on Sunday, right? So you took it Sunday, Asia Open. And you got out down here. Does that look about right? So let's just call it 210 pips. All right, that looks good. So what do you think about working through the risk management live together? Did you learn anything about it? You were sweating bullets over taking the 100 pips, right? Yeah, well, I told you you're worth more, but yeah, well, good, but was there, I guess it, right? Yeah, you're almost closing it. I guess it's hard for you to answer here, but if you learned something about, you know, how to manage that situation, just document it maybe in the video or something. But cool, so we doubled you up. Okay, good risk management allowed you to make 200 pips instead of only 100 pips. Good job. Yeah. Well, that's the benefit of being in the swing trading group. I guess we can work through that. All right, cool. So congratulations. Well played. Okay. Let's go over here. And if euro dollar goes down, this is supposed to go up. So does thing. Okay, great. And it's actually the plan here. Okay, so that's cool. So we know price action is not going to go straight up like this. So you could imagine, you know, sort of the up, the down, the up, the down, the up as you work your way up. Okay, now being in a risk-off scenario, I probably wouldn't trade this at all. But we can still break it down technically if you want. We can go, how do I want to look at this? Just on a weekly basis, right? Just on a weekly basis, there's this. And then if you are looking at this from a bigger point of view, you might be thinking this, right? And you're filtering everything. I know everything to the left and everything you can't see to the left isn't a very good setup for this type of pattern. This is a trend trade inside of a lack of a trend kind of move. But nonetheless, it's kind of interesting, right? And then, of course, like I was saying earlier, maybe I want to make sure I made the comment so you understand it. In a risk-off moment, dollar gets strong and Swiss franc gets strong. So relatively speaking, I wouldn't do that, right? But nonetheless, what I'm trying to show you is the technical analysis, right? That's all I'm trying to show you. The technical analysis. And this price is expected and relevant if you're a bull. If you're a bear, this is the price that's expected and relevant. Okay? And that's that. Well, Luca goes back to his trade here. I'm just watching the chat. He says it still might be wrong if it continues down straight. No, that is not correct. You are managing risk. You traded it down to obvious support. Your risk goes up. There's a high chance that you can give 50% back and all that kind of stuff. So no, it's not wrong. If it continues down, that doesn't make your trade wrong. Right? It's not just the daily S2. You might have noticed that there's other support there as well. So what you do is, if you're still a bear, you let it retrace and then you sell high again. So that's tomorrow's trade. Or if it breaks lower, you sell the retracement there. So there's no wrong. You're just going to re-enter. The right thing was to get out at obvious support. Okay. Yeah. So that's not. Oh, you were thinking that. Yeah. So it's still a good comment. What happens next is the right thing. Okay. If it falls, let's go back to it. If it falls further and you're not on it, it doesn't exist. So let's do it this way. So if it falls further, right? So let's do it this way. Is one scenario. That's the likely scenario, in fact, which means you're going to resell it at 110. But if you miss it, or if it just goes now without you, you're still just going to do this tomorrow, right? So either way, you know, your plan A is to sell this retracement, your plan B is to sell this retracement, but there is no wrong. Okay? Cool. And then let's bust this out. I just want to show you, you know, I have this set, this price that you exited. You exited, you said daily S2, which is right. That's actually our target for day trading. Now, the cool thing is you caught 2 days in 1 day trade, which is actually what I'm trying to teach you to do. But nonetheless, there's some, excuse me, there's something there that needs to be managed, and you managed it. So again, the way I would look at it is, if you are a bear, you're thinking it's going to do this, and you'll trade that. Or you think it's going to do this, and you'll trade that. Okay? So you're in, I got to grab a new color here. Let's do it sort of orangish, I guess. So you're either going to sell there, you're going to sell there. And actually, the difference in price usually is quite minimal. You're just on the next trade. My bigger concern is it really down? Right? Like, I didn't put this pattern in my book. Like, oh, when you see this is what you should do, right? I don't know what the heck that is. Okay? But I know that's support, right? I might not be a smart man, but I know what support is. Okay? I know where we're going to be challenged, and we were challenged there. Okay? That's all I know. Right? So what you do is you identify your support and resistance, and you trade it. Does that look like an uptrend? No. Does that look like a downtrend? No. So really, you're in a series of ranges. Okay? So I know our weekly, I think our weekly was like this, wasn't it? Right? So we don't, the problem is even though that's likely to happen, it's not a trend. Okay? I understand it psychologically, like I believe, which I could be wrong, but I believe a lot of these markets are going to double bottom before they go up. That could be nonsense, okay? The bottom line is, what is the trend since September? Since September on this? Here's how you measure trend. Grab that little tool. You can start anywhere you want. You can start low, you can start high. All you're doing is dragging from left to right. What you're saying is, from this time period to that time period, measure every candle's price, whether it's open or closed, it's irrelevant. Okay? And create an average, which we call a mean. And then from the average price, look at how far away from the mean price goes, typically, and show me the standard deviation above and below the mean. Okay? So I'm just going to, again, I'm going left to right. I'm not changing the angle. This is just the math. I'm saying include all these candles. So I'm going left to right. And it's calculating every candle. What's the average price? The middle one is just simply the average price. Okay? So for a while here, it was an uptrend. At the end of the year, see, I'm at November 15th. Uptrend. 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 By the way, during this period, we were bulls on this pair. Is that correct? Do you guys remember September and October and November and December of 2019? Okay. This is interesting because it's not always going up, but we were bullish. We were bulls. So having looked at the past year, can you see that if you had stayed a bull and only bought bullish trades and then walked away from the market when it was bearish, that you would have had a career simply buying the ups? Okay. Do you remember 21st night of September? No. Sorry. I hope. Okay. So, what did we expect to happen January 1st? Up or down? Daniel, more of seasonality than anything. What did we expect January 1st? Down. So anyway, so here we are. There's January 1st. Down, 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 down. Look at the averages, the slope. The rise over the run is changing. Y equals mx plus b if you do your calculus. Okay, here we are now, February. Whoa, it's actually negative. And then, holy smokes! And then, holy smokes! And then, holy smokes! And here's where we are today. Nothing. 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 There's actually a slight negative tone to this. Okay. Did I miss, what was the September 21st issue? I don't remember. It looks like it was a good setup. But my point is, if you're certain that this is up, or if you're certain this is down, I'm trying to point out is your uncertainty may be it's a song. Reminds me of that Green Day song. Oh, sorry. It's a song. Is it really? Do you remember when we fell in love? It was September 21st. Like that's not actually. Anyways. So, anyways, don't be certain here. Okay, I am looking for changes of trend and such, but we need to be. At the same time. This is difficult, right? You have to have a bias, which is a lens, but then you have to be able to see clearly. So, yeah, challenging. All right. So if you were a bull, oh, we already did this one. Then this is a not so good setup. The reason for it is, like, if you're looking at the pivots, it should be obvious. The next part is, this part, it's not going up or going down, so you know how to trade this, I'm sure. This is a range, you trap it. So up, 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 down, down, buy, 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 up, down, up, break, pull back, sell. Pull back, sell. Pull back, sell. That's often what happens here. It doesn't have to happen this way. But I call this, well, let me ask you, what is the analogy I use in my book to discuss this change in trend? How do trends reverse in the Forex market? Forex markets reverse like, what's the metaphor? The Forex market reverses like, oh, I just noticed you're probably answering, for some reason my chat stopped moving. There we go. The Forex market reverses like an old man easing into a hot bath. Remember, this is the worst book ever written, especially a book about trading, and in particular about Forex. But out of all the books on this planet about any subject, over thousands of years, my book is the worst book ever written. But that was pretty good. Well, that's one of the Amazon reviews. It's the worst book ever written. You know, one of the reviews is actually quite funny. He's like, I sat down at my bookstore, I flipped through the pages, and it sucked. And Amazon, he didn't even buy the book from Amazon. He's just like, yeah, I saw it once. It was horrible. Toilet. Thumbs down. I'm like, dude, you didn't even buy it. So anyways, it's funny. So anyways, that's a documented fact. Worst book ever written. But it seems like I've convinced at least 100 people how to remember important information, like how to treat the scenario. And that is, that part says up, down, remember? Remember, I break it down, and then there's even a pullback and a breakout, a big pullback, and then the short, right? And so at least you got that. Yeah. Yeah, it's funny, right? Like, I think the book opens up like, when I first started trading, I sucked as a trader. And I worked really, really hard, and then I started to suck less and less. You know, there's the very first Forex Expo, Forex Trading Expo, the very first one. I was a keynote speaker. And they wanted me to sponsor, and I'm like, but I said, okay. So what I did is I made a DVD. I actually found the artwork somewhere recently. I don't know where it is. Anyways, I made a DVD, printed a DVD, right? Cost me thousands of dollars to print thousands of these DVDs. And it was a video of me placing trades and talking through the trades. Because this was so long ago, YouTube, I don't think even existed yet. Okay? The very, very, very first trade on that DVD that I gave out to thousands of people, I lost money. The second one, I broke even. Right? The opposite of get rich quick. I spent thousands and thousands of dollars. I gave them away. I put them in every bag, every conference bag. Thousands of people had it. Brought it home, stuck it in their DVD player. Boom! That's how I lost money. Let's talk about what happened. So anyways. No, this was so long ago, dude. But somewhere, I do find these things. No, I don't know where it was. I got a box somewhere, I think is what it was. I got some good history though. Like, hopefully you find this fun and not lame-o. But I've known many of you guys for a long time, so we can go here. Look at. So here's one. This is. I think this is the book launch, but this is me promoting my book, right? Buy this book. So I was signing the book there. Okay. Isn't that nice? Your mission, learn how to trade Forex. Your guide, strategic and tactical Forex trading, right? Here's the book review. The founder of FX Street likes it. The founder of the Forex Trading Expo likes it. Isn't that nice? And look at the back. Beautiful, huh? Buy the book, get it signed. This was from the launch party. Isn't that neat? So I was signing books, so that's 12 years ago. How about this one? Looks familiar, huh? Learn how to trade Forex while the markets are moving. Cool, right? See, back then you had to pay $1,500 and I would teach you. So this is a pretty good deal. Yeah, so I followed up with the dude that ran that company, that doing the artwork and stuff, because at the time he was at the Stanford University Web Lab, because even websites were pretty new. So he graduated and he started this company. And he worked with me for a few years. He built booths. He built all these flyers. He did all the marketing stuff, which was really cool. Apparently, he went on to Harvard, right? And while at Harvard, became the president of the Harvard Cooperative Society between MIT and Harvard and all that kind of stuff. And he ran a lab there, another sort of web design, AI technology, and he's gone on to do some pretty amazing things. And I think he's done a TED Talk now. So anyways, pretty funny, huh? So lots of history anyways, guys. All right, so dollar pairs, yen pairs, I think we did most of them. Let's just do an overview of this. Beast, remember, Beast is unusually strong at the moment, but still isn't really breaking anywhere. I'm a little concerned because you can see I have this set off as risk off. I'm a little concerned because that's not what I wanted, actually, right? But let's move this up. Okay. Let's move this up. And the original trade plan is still valid, but we're stuck in this range. It's not really cool, right? Not really cool. Okay? It's not really cool. It's not really what I wanted. I wouldn't be so certain if I was a bull. I'm a lot less certain as a bear. Something's going on the pound specifically. So, I mean, you can manage this any way you really want. If you have total conviction for the down, then your trade plan is still valid. You don't like it, but, it's still valid. By the end of the week, you'll be convinced. Now, you might say, I don't know what happened with the pound, or you might say, you know what's happened with the pound. You might say things have changed since Sunday. Here it is Tuesday. Since Sunday afternoon, you can say, well, you're still bullish on the yen, but there's something positive going on with the pound, and you're bullish now on the pound, and you have an opportunity to either take a small loss or get out at break even. You could choose to do that and say, right there, like there's a difference between being stubborn and being consistent. So if something has changed, just remind yourself before you bail on a trade plan, ask yourself what has actually changed. And you can say, well, the pound is actually more bullish or should be bullish or is bullish now, regardless of my plans for the yen pairs. So if you can get out for a small loss, get out at break even, then so be it. Would you bail on a small win? I don't like small wins. Now you might argue with me. You're like, money in the pocket's money in the pocket. And actually, I don't agree with that. Because first of all, it's going to screw up your averages. But second of all, you're going to start giving up your how do you say it? Your discipline for confidence, which means you're giving up the trade to run. Okay? So there's a difference. If things have changed, things have changed. Bailing out on a trade for negative 3 pips is a nice break even, and you can document it as a loss. But to get out because you have 35 pips and it could go to nothing, you don't need the 35 pips. 35 pips isn't going to do anything except lower your average win. See, ideally, your history says something like this. Your average loss is 33. Your average win is 333. Do you think you'd get... Do you think an investor would be interested? Well, yeah, you know so. So how do you control this 333? You only take profit at 333. 100% of your wins are 333. You're like, well, how do you do that? Well, you either, right? How do you do that? You always get knocked out for -3, or you always get knocked out for 333. And even if it's 150, you don't take profit. Okay? And so if you have lots of -3 trades and every once in a while you have -100, notice that even if your stop loss is 100 pips away, your limit is 333, right? You're still 3-to-1 risk reward. How many people think risk reward at being 3-to-1 is reasonable? How many people would say that? How many people believe that or think that a 3-to-1 is pretty reasonable? Okay? Okay, cool. Thank you. Benjamin says that it's actually really good. I would say I'd just say that's about right. How many people believe 100 pips stop loss is enough? You might even think too much, but certainly enough. Well, Raymond, you still have the trend, the fundamental trend behind you, right? Okay, 100 is enough. Now, I would guess that the vast majority of you have it way smaller than that. But here's the thing. You probably get stopped out a lot. You probably have 3 times more losses because you're only risking maximum 333. Now, how wrong do you have to be -100? Well, you have to be basically 100% wrong, right? Like if you were selling lower highs and lower lows, you'd have to be like a higher high and get knocked out. Like you have to be very, very, very wrong, but you're a fundamental trend trader. You're not very, very, very wrong a lot. Okay? Because you're trading with the trend. How could you be very, 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 very wrong a lot? You're like, dude, don't you see the trend? You're like, no, I'm on a 15-minute chart. I don't even look at the 4-hour. Well, there's your problem, bro. But 100 pips is enough where you have to be very, very bad, meaning very, very wrong, to be knocked out. But if you're betting on the trend, by definition, that can't happen very often. Unless you're buying in a downtrend, you're not trading properly, right? Or you're trend trading in a range, right? You see what I mean? But if you just recognize an uptrend and you buy dips, I doubt 100 pips is, I doubt you're going to be that wrong often. Now you'll be wrong from some time because what'll happen is a trend will go from bullish to bearish. But what I'm saying is it's a good loss. Okay? It's a good loss. Now, sometimes the trend slows down or fails you, or volatility kicks in, and because you're not in at a very good place, or you got unlucky, volatility comes in or something. happens and you bail on the trade. What I'm saying is lock in the -3. Don't put it to 0. Lots of people put in like +1. That's the dumbest thing ever, by the way. If someone locks in +1, you know they don't know how to trade. And I'll show you why. If you lock in -3, your trade plan has failed, right? You didn't say my trade plan was to drop a lot, take the risk, and then break even. That's stupid, right? Like nobody plans that. So if your plan has failed, meaning if you believe there was going to be a lower low, lower high, lower low, lower high, and you sell here and then it pops back up, you're like, whoa, whoa, I'm out. Okay? Document that as a failure, because what your plan was more like this. You sold here and you expected a lower low. Well, it didn't even get through the double bottom, so you're like, that plan failed. Oops. So document it with a -3. Okay? Now that can happen often. So what if your losses look like this? -3, -3, -3, -3, -3, -100, right? -3, -3, -100, -3, -3, -3, -3. That's more for very short-term trades, Raymond. That's like intraday trading, the New York or the London Open or something. This is much more, this is bigger than that, let's just say. Okay. Now, if you go back to last night's, you were there, right? Yeah, you were there. Last night's discussion in the Asian session that I had with you guys had about using that map, but on big trades, right? Like how, where you're going for 1,000, how do you deal with that, right? So anyways, go back to yesterday's video. Anyways, so you see what happens, guys? -3, -3, -3, -3, right? -3, -3, -3. What's your average? What's your average loss? $200 and what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So, right? So you've lost 233 pips on on 13 trades. Can somebody do the math? -233 over 13. What's the average? Is that right, Paul? Paul says 21. That seems good. Do you understand this? Now this goes into your trade history. So we got two say -21. So on your official trade history, you lose 21 pips on losing trades. Okay? Now, what if you never, ever, ever take profit unless you hit 333? Whether it's 18 or whatever, but you can do the math. 233 over 13. Okay. This one's easy to control. Not only are you up on one winner, but you're probably going to have like 5 winners a month. And you're going to have 13 losers. Would you invest? Even if it's only 3 winners and 13 losers. See, some people, especially those that have never traded money before, or other people's money, they're obsessed with their winning percentage. You understand? They're obsessed with the losses. They're obsessed with not taking losses. It's stupid. I have no losing trades. I have a 100% winning average because I lock in +1 on every single trade. And I'll ride out losers. Even if I'm down 400 pips, I'll ride that out till I get back to break even. It's so dumb. So in this case, what I'm saying is, hang on to your winners as much as possible and never get out for less than you're worth. Okay? And you might only have 3 winners and 13 losers. You lose more than you win, but your losses are tiny. And your wins are big. Because you're like, yeah, I lost 13 trades, average of 20 pips each. I'm out 233 pips on losers, but I'm up 999 on winners. And they're like, wow, no kidding, how'd you do that? Oh, I keep my losers small and I let my winners run. That's a hell of a sales pitch, right? Could you get on stage and explain that to somebody? And how would you feel if you were explaining that to potential investors? Oh, well, I keep my losses small and I let my winners run. Right? Now, some of you might be saying, Wayne, I've never even had a 330 pip winner. Never even thought to try. Well, for this, you have to have a couple of things. One, you have to have analysis, right? Ideally, fundamental analysis, but certainly enough technical analysis to identify a trend, right? And then you got to try. You got to actually try. So I don't even see this as going big. Really, 333 is usually sort of halfway through a trend. Okay? Okay? But you can't fake 333 pip trades. You're going to have some good technical analysis, good analysis in general, whether it's fundamental or technical, it doesn't matter. You're going to have a trade plan, right? And you got to know where to get in, and you know when to manage, and you know when to take the loss and all that kind of stuff. But so like this plan, okay, this is what we're looking for. The plan actually is to have an old man ease into a hot bath. Now, we haven't got this, so this might be one of your -3 trades. It might be one of your -33 trades. Okay? Okay? But even though, right, don't forget that part of the lesson. Even though your stop loss is 100 pips away, you rarely get hit. That was the other one. You rarely get hit. Some of you guys, you have your stops too close because you're trading money that's too big for you. That's why you can't afford your losses, and that's why, right, you don't let your winners run because you're so happy to pay for those losses. You're like, oh my God, I got another 100 pips back, and you bail. So anyways, either break even or be very wrong, but don't get unlucky, okay? So anyways, so if I'm wrong on this, I might just take a break even and try again, right? But the thing is, your trades should be worth 333. And if they're not, you're not doing enough analysis. This is only plan A. I have a second plan on this pair, guys. And what do you think I believe this trade is worth if it works out? It's not working out very well, and you can see on the long term, this is actually not really happening, okay? I have some analysis that says that this should roll over. If it's going to roll over, it should roll over. It just doesn't have to do it. Okay? Right? This looks like it's a real challenge to this plan, but the plan is still valid, okay? But is it worth it? Well, let's see. Okay? Plan A says I will be selling this below 135. Okay? That was the beginning of this. We're going to force this down. It's really more like 134.30 or 134.50. So we're kind of right there now. Okay? And the target is 968 pips. I should be embarrassed to only get 333. That should be embarrassing. I should have to apologize. Okay. Going to Luca. Luca's asking about lot size. So let's say your lot size is super small. Okay. But you have a trade plan like that. So you got 1 small trade, 2 small trades, 3 small trades, 4 small trades, 5 small trades, 6. Versus dropping 6 mini lots right here and having that be maximum risk, and you get freaked out and you leave this on the table. Okay? The interesting thing is, right, when you drop, let's say here, and you have high risk, what's interesting is if you do it the other way, you sell it. Oops, let's do blue. You sell it, it comes up, and you sell it. Well, your first trade has no risk because you're already profitable. Okay, and then it comes up, and then you sell it again. Now your first and second trade have no risk. You're only risking that 1 mini lot. And then it makes a lower low. You're able to move your stop. Comes up, and now you sell again. So now you got 3 trades all profitable, and now you're still just trading 1 mini lot. And then it very quickly becomes profitable, which means you don't have any risk, and you do it again. Each time, you're only risking 1 mini. You're never over leveraged, ever. Because you're always in it for 1 mini. Okay? And you got a bunch of winners behind you. So now you have 1, 2, 3, 4. You got 5 trades open that are profitable. So you're making your money. You're only risking 1 mini on the 6th trade. And as soon as that becomes profitable, you'll have 100% available margin. If it becomes a loser, you probably have 98.6% available margin. Even though you got 6 trades open, 1's a loser, and you got 5 winners. So like you're never, ever, ever. Okay? I've had well over 100 trades open. 100 trades open and 100% available margin because I didn't have any losers. Okay? Because I got out of those losers quick. But I let every single trade, every winner run. So I had 100 trades open. They were all winners. Now, I wasn't 100% successful. I had lots and lots and lots and lots of losers. But I had 100 winners still open, which means I had 100% of my available margin because I had my entire trading account plus all the floating profit, right? I could have taken another 200 trades and still had that, right? So the way that works, guys, just to be clear, okay, you sell, let's do this. You sell 1, you sell 2, you sell 3, you sell 4, and then there's an up, and then you sell and then there's an up, and then. So let's say this is a combination of day charts and, you know what, I think, let me clear this because I don't mean to use the actual chart. So let's just do blank. So let's do this very quickly. Let's redraw this actually. So a big long-term downtrend, let's say. Now we know there's price action inside of all of this. Okay, and let's say this is a course of 1 year. Okay, so this is day charts and all of that kind of stuff. And inside you got trade plans and there's moves inside of moves inside of moves, right? But you sell one, you sell, sell. I got 3 winners, sell here. This one pops out, okay, break even, okay. Probably don't sell again to here, right? And then sell. And then sell, and then sell, right, out, right, oh, no, okay, and then sell, so this is out as well, down, big win, right, you can see this is going to be a problem, so then you sell this, and you sell this, and you sell this, and then there's the end of the year. So, you have, okay, let's say this is gone, this is gone, this is gone. Win. No. That one's gone, that one's gone. And that one's in. Okay, gone, in. So you have 1, 2, 3, 4, 5, 6, 7 trades. Okay. We have 7 trades open at the end of the year. Okay. But they're all open. So this might be 2,000 pips. This might be 1,800 pips. This might be 1,700 pips, right? Break even, break. Right, you killed this one. This is great. So there's 1,500 pips. Break even and gave back. Knocked out. Right, and then 900, 700, 500. And along the way, you got little losers and lots of break evens. But you got many thousands and thousands and thousands of pips. It's not that you were a 100% winner. It was that all your losers were tiny or break even and you got out. So my point is I've spent, almost a year building portfolios like this. I don't think it's taken me an entire year. Usually there's like 6 to 9 month waves, but I've been in a situation where I have over 100 trades open and 100% available margin because they were all profitable. You're like, 100 profitable trades, Wayne? You must be the greatest trader in the world. No. That's not what I'm saying. What I'm saying is I never got out of my winners. And I got out of all my losers. Lots of little losses, lots of break-evens. I mean, dozens and dozens and dozens, probably hundreds of small losses and break-evens. But I never got out of a winner because I was trading on fundamentals. Okay, that's my point. And that's how you trade a portfolio, by the way. Okay, now here's the interesting thing. Most people come to these webinars and they want to know how to scalp the news or how to make 18 pips fast. Okay. And I'm like, okay, well, that might be fun, but that's not how you make big money. That doesn't buy you a yellow Lamborghini. That doesn't even buy you a yellow Humvee. That buys you maybe a Tonka truck for your kid. Maybe. Okay? So just trying to say there's another way of doing this. Another way for you to think about it. That's all. There's many ways to trade Forex. That's how you build a position trade. Okay, a portfolio, if you will. What do I mean by a portfolio? Well, when you look at my trades in those scenarios, you'll say, oh my God, Wayne, you've been long every single yen pair and every single Swiss franc pair and every single dollar pair for like 9 months straight. Oh, you must be risk on. I'm like, yeah. There you go. And it's done. Like, you look at it and it makes sense. There was a strategy for the entire portfolio. It wasn't one-off trades, right? How hard is it to keep track of them all? It's very, very easy, John, because all the stops are at break even. So typically what happens, John, is I bail on them all at once. Okay. One of the things we were talking about in the swing trading group yesterday, well, actually, technically it was the day trading group. But anyways, in our live trading group last night in the Asian session, we were talking about how to manage those situations where your trades are like approaching 1,000 pips and you're getting nervous because you're too profitable. How do you manage that if you think there's another 1,000 pips, right? And we kind of talked about it, Lucas' situation where he had 100 pips and he was going to bail on his trade. I'm like, whoa, your trade's good. Why would you bail, right? So we talked through that, and I used kind of that analogy of how I help people, manage these portfolios. And it was the same kind of logic, and he doubled up his money just because he had a better strategy for risk. Just like that, he made an extra 100 pips because he handled it better. So how hard is it to manage 100 trades? It's not that hard at all. But when you understand how the markets work and how they function, and you understand the humanity behind it, you kind of know when you should be considering getting out versus times when there's no way you're going to get out. Even if there's a big pullback, you're just like, no, I ain't getting out, even if there's a big pullback. Okay. And that's what helps. And the other funny thing about this, John, is when you bail and you cash out of that portfolio, it's a horrible feeling. You become emotionally attached. It's really interesting when you open your computer for the day or check your phone and it's empty. It's sad because now you have to rebuild your portfolio that you spent a year nursing hour by hour. Okay. So we'll get you guys there. We'll get you there. And I think I gotta go. What was your biggest position taken? I don't take big positions, actually, so I've never taken a big position. But I've traded $1 billion a month. Does that sound like a lot of money? What's my plan B? Exotic dancing on cruise ships. Oh, you mean for currencies? Oh, I thought you meant if Forex failed to work anymore. Okay. I'm not sure. So I will meet you guys tomorrow here at Forex.Today. If you want to become a member of the live trading group during this COVID-19 crisis, we also, not only do we meet Thursdays for swing trading, we meet Sunday, Monday, Tuesdays, Wednesdays, and Thursday nights to set up day trades. So basically, I folded swing trading into day trading and then gave you the day trading course and the swing trading course and the day trading tools and the templates and the new indicator and all that. It's all folded in. And we just put a wrapper on it called swing.fxbootcamp.com because it was already up and running. But now you can be a day trader and a swing trader and hang with me. And like that group made Luca an extra 100 pips last night. So, I don't know. Maybe you're interested. Swing.fxbootcamp.com. Peace on earth. May the pips be with you. May our profits be above average. Couple of things, guys. ThankTradersWay.com. So visit TradersWay.com, open up a demo. Okay? Develop a relationship with Traders Way. Okay? What else? If you need chart templates, metatraders.com. If you need video training, fxbootcamp.com. If you need the live trading group, swing.fxbootcamp.com. If you need performance coaching, live.fxbootcamp.com. If you need my book, it's on amazon.com. Strategic and Tactical Forex Trading. The point is, there are many resources that have been created and put out there to help you. For example, and in fact, please do this. Go to youtube.com/fxbootcamp. I need to get to 10,000 subscribers. There's only 9,200. I'm going to test something coming up. But here's the reason I bring up youtube.com/fxbootcamp. There's thousands of videos on that YouTube channel. Thousands, all about Forex. Thousands. Check them out. In one of the playlists, there's like a free Forex training course that goes over, I think it's 4 videos that are about 20 minutes each. It's almost like an hour and a half worth of videos on all my trading techniques using technical analysis. Like, start there. That's totally for free. Okay? But while you're there, please subscribe. Okay? No, none of the videos are new. I haven't added a video there probably in 5 years or something. But I want to try some cool stuff coming up maybe this summer. And YouTube won't let me do it until I have at least 10,000 subscribers, and then they turn features on. So can we bump that up to 10,001 and then maybe do something cool in the summer or at the end of the year? So help me get to 10,000 on that one, okay? And of course, please leave comments and likes and stuff on our Forex.Today YouTube videos. It simply tells YouTube this is quality content and that it should be around. Okay? So that's a big ask for me, but thank you if you do. I'll see you guys.